again, distinguished guests, ladies and gentlemen. Good afternoon as well to people online. It's my pleasure to welcome you to this prestigious event. This session was specially curated by AVA Trustees Limited. AVA Trustees Limited is the trusteeship arm and subsidiary of AVA Capital PLC. My name is Adenike Balogun, and I'm delighted to be your host for this event. Thank you all so much for honoring our invitation. Thank you for coming. Thank you for taking out time of your busy schedules to come here and be here today. This session is tagged Securing Legacy, Family, and Purpose. It's a private discussion on trust, governance, and succession. During this session, we'll explore the possibilities of the financial service offerings from all the subsidiaries of AVA Capital PLC. Alongside AVA Trustees Limited, the convener of this event, are two other subsidiaries, AVA Global Asset Managers and AVA Securities Limited. This session intends to broaden and further strengthen our knowledge and understanding of wealth creation, generation, and preservation. Thank you. In your folders, you can please open your folders for people physically here. In your folders, you see an information form and a reflection card. The reflection cards are to write down your insights, clarifications, or comments you might have during the course of this event, while the information form is to get your information at the end of this event. So please do well to fill out the information form and we'll get them at the end of this session. Please fix your eyes on the screen for a safety video. Tea is just right outside if you require tea or water during the course of this event. Okay, to officially start this event, I would like us to engage in a little activity. It will be our icebreaker to kick off this event. So please get out your phones because you require your phone to scan a QR code. All right, thanks here. So please scan this QR code. It's an anonymous poll. The question that will come up next is, what insights do you intend to gain from this event? I believe once we got the invitation as accepted to attend the event, you had things to achieve during the course of this event. So I'd like you to scan the QR code and make your comments. What insights do you intend to gain from this event? If you require any assistance to scan the QR code, please signify and one of my colleagues to get to you. Yes. Thank you so much for participating. Put that back on the screen. Okay, please keep your comments coming. You can have multiple comments. Thank you so much for engaging. Okay, so we have what is this program about. During the course of this program, you will definitely understand more of why we're here. Good knowledge of trust. Thank you so much. I want to understand how trusteeship works. Definitely during the course of this event, you understand clearly. I intend to gain insight on building generational wealth. Thank you so much. You can see your comment coming in. We'll just wait for one more to learn more about the organization, the structure, and how trustees work. Is this session enough to know? Yes, please. Thank you so much for all your comments. How does trust enable capital or wealth grow? Thank you all so much for your comments. You can keep sending them in. Your questions, comments will definitely be attended to and addressed during the course of this event from AVA Trustees team or the other subsidiaries. How does trust enable capital or wealth grow? All right. Thank you all so much for participating. To take us further in this event, it's my absolute delight to welcome the Managing Director of AVA Trustees Limited. Her name is Omobolale Ekane, for her welcome address. A round of applause, please, for her.
Good afternoon, distinguished guests. It's an absolute pleasure to have you all here with us. On behalf of our board, our leadership, and the entire AVA team, thank you for making out time. We know that time is a valuable resource, and you have taken out that very valuable time of yours to spend with us this afternoon. You're welcome to our private session themed Security, Legacy, Family, and Trust. And purpose, I beg your pardon. I'll take that again. You're welcome. And apologies for the online joiners. You're not left out. Thank you. We recognize you. Thank you all. We have a couple of people joining across the world. Some people who would have loved to be here already away on their summer break, but they have been so mindful to join us this afternoon. So we're all welcome. Again, I welcome you all online and physically to our private session this afternoon. Theme Securing Legacy, Family, and Purpose. At AVA Capital, when I say AVA Capital PLC, I speak to our 4 subsidiaries. Our investment banking firm, our asset management firm, our securities trading firm, and of course, our trusteeship firm. Our core philosophy is simple. Every financial journey must move intentionally from capital to opportunity to legacy. We partner with our clients to grow and maximize their capital, unlock strategic opportunities for wealth creation, and ultimately ensure that the wealth built is protected and seamlessly preserved across generations. Because we believe that the true story of wealth is never ending, it's good to acquire wealth, but ultimately it's better when we have legacy for tomorrow. To set the perspective for this meeting, I would like to share a brief story. A visionary entrepreneur spends his life acquiring prime assets, building enterprises, and creating substantial wealth. His constant refrain to those around him was simple: I am doing this for my family. Yet, when he passed away unexpectedly, his life's work did not bring his family security. It brought his family a battleground. Without a clear trust structure in place, his estate spent years tied up in court. Prime assets were frozen, operations stalled, and family relationships fractured under legal strain. Decades of work were endlessly eroded, not for the lack of love, but for the lack of structure. As trustees, we have seen stories like this pan out so often. Today was curated to ensure that stories like this do not repeat themselves. We're not here to overwhelm you with complex financial jargon or presentation slides, but we are here this afternoon to have an open executive dialogue about foresight, exploring how structured trusts and succession planning provide clarity, safeguard family harmony, and guarantee that your life's work serves its purpose. Please enjoy your time with us. I implore you to connect, engage around, and we have all the MDs, the managing directors of all our entities. We have Kunle Odebi, managing director of our asset management company. We have Adijoke Ganil, who is managing director. You just wave your hand. Managing Director of our securities trading firm. And we also have our Group CEO, Mr. Kari Fadansi, who is a guru in investment banking, and he will be answering all our questions as regards investment banking. And last but not the least, it would be very wrong for me to leave this podium without introducing our esteemed chairman of the board, who we are so happy to have him here, Dr. Adirudi. Thank you, sir. We're grateful. But sir, if you come to the front, we know you always want to be at the back. All right, sir.
What do you say?
So please sit back, relax, and do enjoy your time with us. Thank you.
Thank you so much, Bolange Kane. Thank you all so much for coming once again. So I'd like to run us briefly through the program of events for today. The first presentation will be from AVA Trustees Limited by Woyosore Drojaye. The next presentation, the second and third presentation, will be from our other subsidiaries, AVA Global Asset Managers and AVA Securities Limited. During the first presentation by AVA Trustees, we'll also have and discuss a case study, the Gani Fawemin Toss case. We'll also discuss that at length during her presentation. Then lastly, we would have a question and answer session and also onboarding to open your various accounts with AVA Capital PLC. Okay, so to kickstart and have the first presentation, please join me, give a round of applause to the head of AVA Trustees, Moyosore Drojaye, for her presentation. Thank you. Good afternoon, distinguished ladies and gentlemen. We're so delighted that you've come today. We invited you and you made it here. Please give yourselves a round of applause. Thank you so much for coming. It's a friendly room, so before we get started, I mean, we all know that building wealth is not an individual sport. You're literally just one call, one handshake, one relationship away from meeting anyone that you need to meet. So we always like to facilitate, networking and relationships building in these sessions. So I'll encourage you, if you don't mind, please rise and say hello to someone you don't know, learn their name, and I'll be asking, actually, after we do that for about a minute or two, someone you've not met before, no cheating. So find out also two other things about them. Thank you so much for participating. I would like to call one person, random choose, please. But if anyone would like to volunteer to share information about, what they learned about the person they met, so their name, and maybe one or two other things about them. Any volunteer in the room? Any volunteers? I want to tell me the name of the person that they met and one or two other things that they learned about them. Okay, great. You have to volunteer.
Thank you. I'm happy to say that I made it a bit up works in the LTS, and also he has a side hustle who launches.
A round of applause, she. Thank you. That is the purpose of networking. I mean, you never know. You may need a logistics executive soon, and it will help you. All right, awesome. Thank you once again for coming, attending our session today. It's a private session. We have some of our participants online. You're also welcome. We're so grateful you made our time today. Just as my MD said, we're not going to bore you or overwhelm you with financial jargon. It's really just to have a conversation, and it's also supposed to be interactive. So if you have questions in the course of the session or comments, you can also let us know. You can jot them down, and then we'll take your questions at the different sessions. So we'll get started, but just to assure you and reassure you, this is not a conversation about when you're born. You know, sometimes when we're talking about trusts and wills, we're a bit guarded because it tends to talk about legacy transition and all of that, but it's also very valid for your wealth building while you're very much alive, and we're going to talk a bit about that. The case is going to allow us to also discuss the situations of succession, and passing on assets and other forms of investments to your beneficiaries. But we're going to actually start with your present day today wealth building architecture. So you can go to the first slide. All right, thank you. So before we start, we want to clarify what a trust is. So a trust is not about debt. It's not about surrendering your assets. It's actually about converting private wealth to governed architecture, right? I want to start with a scenario. Let's cast our minds to a Lagos businessman that we know, on entrepreneur. I'll give him the name Kola. So let's say Kola has 3 apartments across Ikoyi and Lekki. He has scattered idle cash balances in, say, 3 banks. He has stocks across 2 stockbroking firms, maybe one AVA Securities, hopefully. And then he has some stake in a private company. Everything held in his name, no unified mandate or strategy. The issues start to emerge, right? He's going to have tax issues. He's going to have scrutiny issues from the regulators and his family as well. I mean, he's going to have people looking into his business left, right, and center. So this is where architecture in your wealth building becomes very important. How many of us here have investments in more than one institution? Honestly, is a safe space. Okay, thank you very much to our chairman. I'm sure we do, right? Thank you, thank you. My question then is, do any of those institutions speak to each other in any way? No. All right, so that silence there is the gap that we hope this conversation will fill. And because oftentimes the challenges we have in growing our wealth, structuring our wealth for legacy, for our beneficiaries, even for here and now, is not really a wealth problem. Most times it's a coordination problem. And that's where the trust comes in to help. Okay, so the trust replaces fragmentation with a form of architecture that we can build. And it doesn't matter whether you built wealth to a certain level or you're just starting on that journey, because I know we have a mix of both categories of people in the room today. They always say the best time to start something was 10 years ago, but the next best time is now. So you can start to put those structures in place. And I'm glad, trustees is here, asset managers are here, securities traders are here, and they can together, work towards creating a unified mandate for you going forward. Okay, so let's look at how a trust is structured to give you more insight into this conversation. Next slide. All right, so every strong structure starts from pillars, right? So with the trust, it's the same thing. We have 4 strong pillars that hold up this framework that allows you to build your wealth fund architecture. So number 1, you have the settlor. In this case, that's the clients, you yourself, we hope. And then you have the trustee. in this case, I'll say AVA Trustees. So they said law gives us their instructions. You give us your instructions, you tell us your wishes, you tell us what you're trying to achieve overall. And then the trustee takes those instructions, those wishes, codifies them into a document, the trust engine itself, which is the trust deed. So the trust deed then guides, everything about how your wealth is coordinated, distributed, and grown, for your legacy as well. And then of course we have the assets. The assets form the capital base. So in setting up a trust, you're not losing control. You're just formalizing that control, allowing institutions to help you to grow it in such a way that can perform better and outlast you. Next slide, please. And why? The next question then is, why? Why set up a trust? And I'll start to go over some of those points and show you the benefits of setting up a trust. When wealth scales, risk scale with them. Some of the risk that scales as wealth scales. Number one, regulatory scrutiny. You have tax visibility. I mean, we all know that NRS is not passive. A lot of the regulators are not passive. Beneficial ownership transparency is also increasing and expanding. So you don't want to live life, build wealth, just winging it. You want to know what you're doing at this time. You don't want to find out about your tax structure in the middle of an audit, right? That's like getting insurance after the accident has happened. You want to be intentional. You don't want to get to the end of the journey and find out that there was no structure aimed at a particular goal. So it's all about intentionality. It's all about being deliberate. All right, so I have my first reflection question for you. If you look into your folder, you see a reflection card. If you haven't brought it out yet, please do. There's a pen as well for you to write. All right, and my question is this. You take a moment to think about it, and then you can pen down your answer. Is if something disrupted your personal structure today, would your capital continue functioning uninterrupted? If for one reason or the other your personal structure as an individual was disrupted, would your capital, your wealth, your assets, would it continue to perform uninterrupted? So I'd like you to answer it like this. If something disrupted my personal structure, my capital would continue to function uninterrupted, or my capital would definitely not function uninterrupted. I would like you to be honest in that answer. Let to bring us to, point of discovery. All right. That's a sailor moment right there. So we then go to how exactly do we help? How do we start to build the trust? We have the 4 pillars. We understand why. We understand some of the risk when wealth scales. So how does this trust actually start to perform? How do we then go about it? Next slide, please. All right, so this is where we start. Once the trustee has gotten your wishes, understands what you're trying to achieve as an individual, what you like for your legacy to look like, we take those wishes, we create the trust deed, the trust engine, and then he then begin the transfer of the assets into the trust. And when I say transfer, you're not giving us your assets, because if that was the case, I'm sure I will have a job, right? So you're actually just formalizing how those assets are held. You're upgrading how those assets are held. So, for example, if you have properties, right? If you have investments, instead of holding those properties in your personal name, or if instead of them being personally held, you transfer them to the trust. So the trust has an entity that can actually hold those properties, right? It has documentation that can hold those properties. And then what happens is, instead of the income from the rental properties going into your personal individual accounts or an account accessible, to you, and by extension, anyone who, is able to speak to your emotions at any point in time to make a transfer, right? It's held in the trust account. And because of the overarching mandate, unified mandate of the trust accounts, the cash in it is better managed towards the aim and objective of the trust. So that's one example. So the income flows into that government structure, and then your capital cannot be impulsively liquidated. So this way, your proceeds are safeguarded and you have discipline by design. Like I often say, a lot of times it's not really that the wealth isn't being built or that it's not made available, or it's not growing. It's really that there's no structure that ensures that it outlasts this generation and provides benefits to generations after. So the next slide. Now, when you transfer your assets into the trust, and the proceeds are going into the trust account, and there's a unified mandate, there's an objective, there's a way that everything is now being done to ensure that your legacy is being built on a rock solid platform. What you actually become is your own personal legacy platform. You're no longer operating just as a high earner at that point. You've now become an institution, right? Because you're now standing on the stronger pillars that will ensure that your wealth outlasts you. So I also have another question I want to ask at this point for your reflection card. If I asked you to summarize your assets allocation, right, so far, I mean, some of us agree that we have investments in different institutions across different asset classes. I want you to just take a moment to think about how you allocated those assets. Are you able to summarize this in 60 seconds for me? And can you see any deliberate intention in creating that assets allocation strategy, honestly? So it's a quick exercise. All your assets, if you have cash, maybe sitting in banks, maybe that's 60%. If you have properties, maybe another 40%. If you have stocks, maybe another 10%. I don't know. That's just a random portfolio. Maybe Kunle could help me come up with a better portfolio than that. But if you can write it down and just examine it, does it show any deliberate intention to you of what you actually want to build? If it does, congratulations, you've started on that path towards building legacy, standing as an institution. And if it doesn't, well, I'm glad you're in this room today because we're going to give you a solution, right, to actually start that process of deliberate asset allocation through a unified mandate with your trusts. Something I see often, even with our clients, is that because there's no architecture behind the wealth building. They have their assets with different kinds of advisors. One is hoarding cash, one is chasing yield. All the advisors are aiming at different things. But when they bring us on board, we're able to bring all these advisors into alignment. We show them what our clients is really trying to achieve over not just quarters, but over generations. Then they understand that, okay, this is the priority. This is what we need to optimize for. And it just makes everything more seamless for the client. And so this is where, building on the architecture of a trust helps, because now you have a professional who is really on the side of your legacy. We're not just following trends. We're thinking about the long term. Some advisors could be thinking, does this make sense? Even the clients could be thinking, what's the thing that everyone is investing in right now? What's the trend? What's hot right now? Or we keep asking them the question, if you do this today, will it make sense for the next generation? Will it make sense for your grandchildren? Will it make sense for you 20 years down the line, even if, you're not necessarily building wealth for beneficiaries, right? So this is where, again, building that strong private capital platform comes into play and makes a whole lot of difference. So next slide, please. A key part of the trust structure that we always like to highlight is the discipline that the trust brings into bear on your wealth building journey. Nigeria itself presents a unique challenge. There are so many high liquidity events. There's a party, there's a wedding you need to attend, there's this, that, and the third for your family. We have inflation, we have very persuasive friends who drag us out over the weekend, and we end up spending more money than we had budgeted. But with the trust, we ensure that your cash isn't just available for anyone who is asking for it, even if that person is yourself, right? We force you to be disciplined because it's not flowing to you, it's flowing into a trust account, which is being governed by that same unified mandate that has been set out in the trust deed. So before you get to the money, essentially, you're going to have to explain to us, oh, have you abandoned your plans? Do you have new set of plans? Please explain them to us so that we can also come on board. And in doing that, you yourself are deterred from just making a cash withdrawal for a flimsy reason. I hope the picture is starting to become clearer. So we ensure your cash is placed in compliant yield optimized instruments deployed only in line with trust objectives and protected from impulsive substantial withdrawals. All right. Next sentence. Okay, so before we move to the next slide, I have a quick question based on the previous slide. Again, for you to reflect upon how much of your liquidity, your cash, is governed versus simply available. So, do you have any portion of your cash that is governed by any mandates, any advisor that keeps it away from you being able to access it easily? And then how much of that cash is just readily available? All right. I trust we're answering these questions honestly. It's going to help us, come to the point of conclusion that we'll get to at the end of this conversation, but actually take action on what we discovered. So, your liquidity being regularly available versus governed is one of the things that we address with the trust. With the trust, we prioritize your capital durability, income sustainability, and intergenerational equity. Essentially, what we're doing is we're measuring the performance of the trust portfolio over generations. We're not just thinking about one quarter, what's going to double, the funds from Q1 to Q2. No, we're thinking more about how the trust portfolio is going to perform over years. Because with the trust, like I said, we're building you to become an institution, not just a high earner. We're taking you from just being someone who owns wealth to someone who can possibly build legacy that sustains subsequent beneficiaries. So there's a difference in the thinking when it comes to cash, when it comes to investments, and everything that the trust is going to deploy cash to. All right, next slide, please. And I'll be wrapping up shortly. We'll go into the case studies right away. The next one, please. All right. So our role as trustees, as one of the strong pillars, what we are ensuring is that your assets remain protected, that the trust outlives personalities, and that the investments follow the mandate. So there's a mandate on the trust. There's a mandate that has been articulated with your trustee. So we're not just going to, let the trust portfolio be distributed randomly. No, there's actually a mandate that ensures that what we're doing follows our ethos, follows what we promise you as your trustees, that your funds, your capital, your assets will outlive you, perform better, and be protected. Next slide, please. All right. So I always like to tell my clients this, that I'm not suggesting that you need a trust. I'm not just suggesting that. That's not just what I'm saying. I'm not pushing trust down your throat. No. What I'm really saying is that you need structure. Everyone can do with structure in their asset allocation. Everyone can do with structure in their wealth buildings. And this is the conversation that we're inviting you in, so that your legacy can outlive you, can adapt across generations, and serve your evolving family and societal goals. So that's where I'll wrap up the presentation. We're going to go into the case study where we'll also discuss further the legacy bit, and then we'll come back to our other subsidiaries. Thank you very much for listening. I'll be back short. Thank you so much, Moya. All right, please, in your folders, you see a sheet with the case study. The title of the case study is The Art of Wealth Continuity. I'll be reading the first two, so you can join me as I read the case study. The Art of Wealth Continuity, the Ganifa Trust Case, a case study for Pilot Trust Roundtable discussion. The case overview. In 2009, following the death of one of Nigeria's most prominent legal and civil rights advocates, questions emerged regarding how his professional empire, intellectual capital, and ideological legacy will be preserved. Unlike many high-profile estates that fragment upon succession, elements of his legacy were structured to endure beyond his lifetime through trust-based mechanisms. This case explores the strategic use of trust structures to preserve capital, optimize income flows, and institutionalize legacy. It invites participants to examine how wealth can be engineered to survive mortality and generational transition. The background context. At the time of his passing, the estate included 1. A well-established and revenue-generating law practice. 2. An extensive legal library regarded as one of the largest private collections in West Africa. 3. Real estate holdings. 4. Public works and intellectual property rights. 5. Reputational capital associated with nationally recognized name. Ordinarily, such an estate might be divided among heirs, potentially resulting in liquidation, fragmentation, or governance disputes. Instead, structural mechanisms were reportedly employed to protect the integrity of core assets and preserve institutional continuity. The structural challenge. The central dilemma facing the estate planners was this: how can revenue-generating assets, intellectual capital, and ideological identity be preserved without being diluted through equal distribution or probate fragmentation? Specifically, the estate faced risks included the following: forced sale of equal distribution, leadership vacuum within the law practice, loss and dispersion of the law library, erosion of brand and ideological positioning, and intergenerational governance conflict. Thank you. Moyo Drojaye will hop back to discuss the trust architecture of this case study. All right. So we're going to discuss the trust architecture, and then we're going to take some questions. I'll be very glad if you can all participate and rub minds and share our ideas. So, while the full trust deed is not publicly circulated, the case allows for a conceptual reconstruction of how a strategic trust structure may have operated. So, number 1, the said law. The said law is the founder transferring defined assets into a trust arrangement prior to death. The trust assets included equity or controlling interest in the law chambers, legal library and archival materials, real estate holdings, intellectual property, and royalties. 3. The trustees. These are designated individuals, they're actually corporate trustees, and or professionals responsible for governance, asset preservation, income oversight, and enforcement of founding philosophy. Then 4 were the beneficiaries, family members, scholarship recipients or advocacy initiatives, and institutional beneficiaries aligned with the founders' missions. Now, these were the strategic objectives of the trust. Number 1 was income flow optimization. Operating assets remained intact and continued generating revenue rather than being liquidated. Number 2, capital preservation. Core assets such as the library were protected from fragmentation, preserving both financial and reputational value. 3, governance continuity. Control was separated from enjoyment. Trustees enforced structure while beneficiaries received economic benefits. 4, brand institutionalization. The founder's name evolved from a personal identity into an institutional legacy. All right, so here's our first discussion points. If you were advising a Nigerian high net worth family with operating businesses and estate portfolios and multi-generational ambitions, would you recommend outright distribution or structured trust continuity? So I'll explain it a bit further so that it's a bit clearer. So in the Ganifaremi case, of course, he had his practice, he had the legal library, an extensive library. The Nigerian Weekly Law Reports have a lawyer, so I don't know if we have any other lawyers in the house who would have benefited from this. Yes, we do. All right, so the Nigerian Weekly Law Reports are sacrosanct to every lawyer's practice. And the Ganifaremi library was one of those libraries and is still one of those libraries that, lawyers literally cannot live without in Nigeria today. So for us, it's very real because we imagine if, in this scenario, he actually transferred the assets to maybe some beneficiaries, his children, or people who were connected to him in other ways. But instead, he decided to transfer the assets to trustees who could manage it, continue to grow it, ensure its reputation is upheld. And then in return, the beneficiaries enjoy the income that flows from those assets. So that's the distinction that we're asking. If you were to advise a Nigerian high net worth family with operating businesses, real estate portfolios, and multi-generational ambitions, would you recommend outrightly, distributing those assets to their beneficiaries or a structured trust continuity model? Any takers to help us with this discussion based on everything we discussed and even your own personal experience? What are your thoughts? Anyone? Okay. Sir.
I would recommend a structured arrangement. And the reason why I say that is if I do outright distribution, I don't know if people I'm distributing it to have skills to maintain and grow what I've handed over to them. But if I structure it in a way that they only benefit from the outcome, I believe you will last longer and even will outlast people I hand over to. That's my thoughts.
Thanks. That was thoughts, sir.
It's basically the same thing. I think it's top put or stop to acted to. It's the best based on what you are seeing and also the case study. So I was thinking about this and relating it to another popular Nigerian NKLGL and thus it might be that it's not necessary to have had a structure for big wealth because you can hardly hear painting them to it.
Staples simply so they are most wanted to say that we actually know if MK Abiola has a structural trust because almost all the pieces that he had, Izulata, we couldn't hear anything about it. On piece of this Gadifari, we are still hearing everything today. So
Okay, that's actually perfectly illustrated. Yeah, on my own part, I would advise a structured trust for growth and continuity. However, I also want to state that outright distribution also had its advantage because he knows the capacity of those he's entrusting things to. He knows how involved they've been during his lifetime. So that's could potentially be an advantage.
Thank you. I'll come from the perspective of the faith. You know, they Muslims, you have obligations and directives of Quran or those that to take outright benefit. Once death has occurred, they are mentioned, so they have to take their one. However, Islam allows for the government of the structured one. Hence, we have work. So the two has to go hand in hand. Thank you.
Thank you.
Right behind.
So I'm so aspecting how I mean, all of this also depends on the quality of trustee as actually managing the trust, right? So it feels like that's like the most important part, right? Because you can also have trustees who, gets competence or pass we should be. So how do you solve for that?
Yeah, so those are some of the considerations for selecting a trustee for an estate that is that extensive. The interesting part is Ganframi actually appointed 3 trustees. Well, he appointed one, then he appointed his successor trustee, in fact, 2 successor trustees. So he said, in case this trustee cannot perform, let this trustee take over. If this trustee decides they don't want to take up this task, let this third trustee, and they're all in the top 3 of the trustees we have in Nigeria today. So definitely, I know that for real, the documents, he definitely put that into consideration. I think that's a learning point for us as well. So based on what you see, what you anticipate for the future, how you want the estate to be managed, you then take that as a major consideration as you quote unquote interview your trustees of the side who is actually going to step into those shoes. So very correct, and all the opinions actually, mirror my own opinion as well. And I just wanted to shed light on really the difference between outright distribution and unit trust structure. And I don't know your name, sorry, man, but you're actually, I understand your point of view, and you're also correct because there are instances where you may actually make an outright distribution. So, say for example, there's a home where family lives. You can actually use the instruments of a will under estate planning, estate administration to bequeath that house to maybe a spouse or children, so they always have that house thing. You can also put it under the trust. Don't get me wrong, but that could be an instance where outright distribution could work, while other rental properties, investments, and other kinds of assets can be transferred to the trustee to manage, and then the beneficiaries can benefit from the income that flows from those properties. So you then have 2 tools really for your estate planning and administration. You have the will, and then you have the trust, and they actually can work side by side. The Gadifarami case is another perfect example of that, where he actually set up the trust using the wills. So he was in his will, he articulated that he wanted certain properties to be put in trust, and then certain other gifts he made outright in cash, and certain other assets to stated beneficiaries. So that would also be a potential way to go about it. So I also had another question. Wait. Would equal distribution destroy long-term value? Equal distribution to beneficiaries. This is like the situation you see sometimes with families where they decide we don't want to think too much about or cause conflict within the family, so let this just be split equally to all beneficiaries. What do we think about that? I just want to hear our thoughts as well. Anyone?
This is the case where I don't think people should have equal rights, because you have to do the type of call this people that you have. If I say, so I know someone is a squanderer, he spends so fast that you can't be sure anything will be left within 6 months. I have other people that are not conservative and manage their that. I would not spend the money equally to all of it. I would rather have this structure in the way that the people very prudent, I can give them a charge. The one that I know will squander the money, I can create the structure that will meter the money out to his over a long time. So they might be upset, but I know.
Good, as you were talking, me and that case, yeah, just get to my the Alliance group, example, and Shadi honestly just surprised because in that case, for instance, it was probably better for them to have split it and let everybody go their way. One of them was transmitting to a multi-billion dollar company. Whereas, if they were still trying to manage it together, it would probably have destroyed Lamy at some point. So I think it also just depends on the second round. And that will be it.
Any other thoughts on that, bro? You move on.
Thank you. Just to add more of that, the both contribution. What is the case study? They know a right or wrong answer. And I would just point to family dynamics. For the Reliance case in India, that works because they understood the dynamics of the family. As our chairman mentioned, you also will understand dynamics where some family members will be more conservative, while some will blow the money out brightly. So I think it all depends on family dynamics, and that's why with the trust in set laws exactly how the assets should be shared, structured. Thank you.
Okay, thank you very much, and thank you for all the comments. You've actually been, on point, right on the money. There's one more question I want to ask, and I just want us to think about this from the point of, what our name represents. Is there any value in institutionalizing a name? So when you think about your legacy, do you think that there's a value in ensuring that that name endures from one generation to another? Is it important? I know that we've spoken about how the trust can endure, but is it just a superficial desire? Is there any purpose behind that that can actually serve a generation after us? And I would like to just hear our thoughts on that. And we wrap up the case study. Any thoughts? I mean, with Ganify, to be honest, once you hear the Nigerian Weekly Law reports, you think Ganify. There's another popular family that I'm sure we all know as well, whose sons are literally still at loggerheads over their father's legacy. And when you think about both cases, it's interesting. The names have also outlived the founders for different reasons. So for me, I guess maybe I'll share my opinion and anyone can chime in as well. I think that a name can outlast you, and that depends on which way it goes, whether there is a negative connotation or a positive connotation in certain lights, right? So why the trust is at the center of this conversation is that you can use the trust to institutionalize a name in such a way that every time people think about that name, use the assets connected to that name. You're thinking about the goodwill behind that name, and supporting it because of what it has done for other beneficiaries beyond the founder. So those would be my own thoughts. If anyone else wants to share on that before we wrap up? I share. Thank you, sir.
Thanks. In terms of name, I don't want to be known. I don't think after I die, I'm going to be known. So I want to remain anonymous, but have control over a lot of assets. So the control is more important to see that they do.
Thank you, sir. That's very valid. All right, a round of applause to all of us for participating. Thank you very much. I'll back to back. Thank you so much, Will. Thank you so much, everyone, for contributing. Thank you so much for the conversations and engagements. So we'll be moving to the next presentation. The next presentation will be by the Managing Director, AVA Global Asset Managers. His name is Kunle Odebiyi. A round of applause for Kunle Odebiyi.
Awesome. Good afternoon, distinguished ladies and gentlemen, who joining us physically and virtually. Like she said, my name is Kunle Odebiyi. While the session was going on, many things were going through my mind as well. All right. I know that some people have decided to start a trust, and I may be wrong. But one thing I am sure that I am right about is that, before I say it, so when she was asking the questions, and whenever she asked about cash, people wrote things down. When she asked about money, people wrote things down. So I am sure that everyone here has capital. So in the next couple of slides, I just want to show you how this group of highly skilled, competent individuals, professionals, help you connect your capital to opportunities, right? So we are AVA Global Asset Managers, and my presentation, just in about 10 minutes, will tell you who we are, our core values, our value proposition, our services, how we connect your capital to opportunities, and some of our products. Right. All right, so AVA Global Asset Managers, we are a licensed and regulated portfolio and asset manager. We are licensed by the Security and Exchange Commission, right? And what we do is we help you manage your wealth. So as you are setting up the trust, the money needs to go somewhere. So our work is to make sure that we are doing the work. I mean, throughout my presentation, one thing that should stick with you is that we will help you do the work. We'll check through investment opportunities, we'll do the analysis, we'll do the appraisals, and we would advise, give you advice and tell you, okay, this is where we think you should put your money. This is where we think you should put your money to make sure that your capital, your wealth is preserved and it grows. All right, so at thank you, please. Yeah. At AVA Global Asset Managers, currently asset under management. I know that some of you may not want to volunteer information on your assets, but our assets under management is in excess of 91 billion. We have 4 collective investment schemes I'll talk about later on in my presentation. And we are rated, we are the rated company. We have 2 ratings agencies who have assessed us. We have an A+ rating from Data Pro and an A rating for ACR. So some of the people that we cater to really are institutional investors, family offices, foundations and endowments coming from trusts, and high net worth individuals. I believe that all these categories of people are represented in this show. Thank you. All right, so this is who we are. Performance is key to us. We execute, give us your mandate, we execute flawlessly. We are adaptable. That's the way the economy moves. We are also very adaptable. We have integrity, we have character. Anything that we agree to do for you, in line with our trusteeship business, whatever your mandate is, you can be sure that that is what we will do. And of course, we are enterprise. We have enterprise. They are innovative in the way that we provide solutions to your requirements. All right, so we have a strong capital base. Our offerings are innovative. Whatever you need, we can structure it. From what Will said, several things she talked about. There are several ways that people want to structure their business. Your trust, the way you want it done. So we don't have a one size fits all for everybody. We sit with you, we understand what your objectives are, and we draft a solution that works and fits perfectly to you. So our services are tailored to each client. Next, this. All right, so I'll dwell here a bit more. So we offer portfolio management, one of the services that we render. So in case you are thinking of what AVA Global Asset Managers, what they do, we offer portfolio management. So if you have ever thought of owning stocks in any company, sort of owning bonds, owning treasury bills, you bet those investment opportunities. What we do is that we do the analysis. You think about commercial papers, we do the analysis, we assess the risk involved in that opportunity, and we give advice on where and how to put your money. So basically, that's what we do. So if you think about anything, any investment opportunity, you read it somewhere, I say, oh, I need information on this. We are professionals, or we are professionals really, that do the research. We put out a lot of our research work. I believe that the people in this room will be joining, will be onboarding to AVA Capital. We will add you to our mailing list. I will give you, send some of these research reports to you, just to keep you informed. Well, so we provide financial management and advisory. I touched on that area. And we also have collective investment schemes. Now, collective investment schemes are basically, they work like trusts. So we pool funds together and we invest in the funds. And all the collective investment schemes are managed by trustees. So it's just a way to make sure that things are done orderly, properly, and in the way they should be. So we have some of these investment schemes, which I'll talk about in my next slide. So quickly. So these are the funds. We have 4 funds currently as of today. We have the money market fund. Now, the money market fund invests in securities that have tenure less than a year or less. So the maximum tenure for a money market instrument is 364 days, right? So we have a money market fund that invests in the likes of treasury bills, commercial papers, fixed deposits. The current rate is 16.5%. Actually, I had a that space. And it does not have all of these collective investments do not have fixed return. So because they are invested in different instruments, the underlying assets, they move, right? So the rate is not fixed. However, we have benchmarks set for all of these investment schemes that we target. They actively manage the funds to make sure that we deliver superb returns to use. So we do quarterly distribution on the money market funds, and the returns are competitive. So if you're looking for capital preservation, your principal is always secure in this type of investment. So it's something that you should consider. So if you have ever thought about investing in a bond, right, you want to invest in a bond, it's all about government bonds. The federal government releases a bond. Corporate institutions also release bonds. This fixed income fund is denominated in Naira, and it invests in federal government bonds, corporate bonds, to ensure returns. And a bond has a longer tenure than the money market. That's just the difference. The difference between them is that the fund has a longer tenure. So anything 364 days or less is money market. Once it exceeds that 3 years, 5 years and above is the bond fund. So we have that as well. The going rate today is 13.5%, and the price is a little above 1,200. Also an opportunity for deployment of your capital. Next slide. All right, so I'll talk about the infrastructure fund quickly. The infrastructure fund is the only closed-end fund that we have at the moment, and so whenever it launches, our investors come in and they are locked in for the period of the investment. So the first series happened in 2024, and the next one will be happening soon. So when it happens, we're reaching out to people in this room to invest. So right now, you cannot invest except to go on the stock of the NGX, the Nigerian Exchange, if you want to buy a unit of this fund, and it's currently around 1 million per unit. So then let me talk about the dollar investment.
So this is an opportunity for diversification. If you want to invest in other currency and you're looking for a safe, secure way to do it. If you have ever tried to do forex trading before, I have thought that you have experiences that only you can share. People have had their fingers burnt severely, but this is a very safe way for you to do it, right? Because like I said earlier, we look at the risk. We have assessed the risk in any of the instruments that we want to invest in, and make sure that we are picking out the best opportunities for you, right? So the return on this, the year-to-date analyzed, is 9.6%, and that's significant for a dollar
investment, any dollar investment is typically around 4%. All right, the minimum entry is 10 units, and of course, it provides a hedge to currency risk, where the risk that naira can yet devalue. This protects your investment against that. All right, thank you very much. So next slide, I'll just be rounding up. So this I want you to be here with today. Immediately after the session, we will be around. You can stop by. Let's just talk. Let's have an idea what you want to do, what visions you have for your wealth, and for your wealth, the creation and the preservation of it. We are not going to charge you. It's free because you are here today. So please take advantage of it. We just trust you. That we think this the right instrument for you, the right opportunities, and we help you connect your capital to wealth, and then our trustees will help you create a legacy structure to preserve it. Thank you very much.
Thank you so much, and thank everyone. All right, so Conley had already said to grow your wealth, to create your wealth. All these can be held under AVA Trustees Video Plus. Okay, so our next presenter is the Managing Director, AVA Securities Limited. Her name is Adejoke Dayin. A round of applause for Adejoke.
Okay. Good afternoon, ladies and gentlemen. My name is Adejoke Dayin, Managing Director for AVA Securities. My presentation is cut out in print slides, and I won't be taking much of your time. It's all about who we are, what we do, and a little bit of advice. So who are we? We just help you connect your capital to opportunities. How we do that? We help you make research-driven investment solution, and we give you direct markets access. Next slide. These are products. We have the AVA Share Trace product, where we help you search for all your shares you got before now, whether you can find them, whether you can't find them. We help you search for it globally, and then we'll put it on an electronic platform for you to see on a daily basis the price and how it is valued on a daily basis. Help you make best and informed decision. Just like Colin rightly said, they also help you create a new portfolio. We structure a new portfolio for you if you don't have any shares before. We help you structure a new portfolio, and then we help you have a mix of it. You have it. You invest into the construction, the banking stocks. They help you diversify your portfolio to help you maximize your profits. We also buy into the fixed income instruments, and I just sort of bond, corporate bond, FGN series bond. We have that one. We have the FGN series bond currently, and it's closing and coming big. You can also buy into non-interest bonds. So we help you create a portfolio and help you maximize your return. And next slide, please. Why we think you should invest in securities and bonds? They remain the most effective asset class for long-term wealth creation. They help you with capital appreciation. Sometime in 2021, MTN offered its stocks at 169 naira. Today, MTN is trading above 800 naira. That's capital appreciation. And needs to be gotten dividend over time. It helps you hedge against inflation, because inflation affects goods and services, and then the stock prices are priced against inflation. They also help you own a little bit of ownership valid businesses across the country, across the stock market. You can, once you buy into shares, you are a shareholder, so to speak. You can go for AGMs, you can make decisions, and then. So we are here to help you structure your portfolio. We also help you with advisory. We send market information to you on a daily basis. We can also tailor our services to meet your unique needs. So that's basically what we do in securities, and we can also put your portfolio under a trust, like Moyo has rightly said. Thank you.
Thank you so much, Adesha guest. Thank you everyone for participating. Thank you for engaging. So now we'll be moving to the question and answer session. Before we go there, kindly fill out your information form in your folders. Please help us fill out your forms because we take the forms after the session. So if we have questions for AVA trustees, AVA global asset managers, AVA security, and also online. If you have any question online, cease of your questions in the chat box. And for people physically present here, if you have questions, please signify by a show of hand and we'll take your question. Online participants as well, if you have your questions, please drop them in the chat box. Thank you. Any questions? Okay, thank you, sir.
So thank you for the great presentations, very enlightening and insightful. My first question will be for the trusts. What's the journey like? How does one begin? And what are the important things to consider when starting on the journey? And what are some of the things that may be like impediments and one needs to really work out in building that trust? That's my track. My second is for AVA Securities, AVA Trace. Sounds very interesting. I'd like to know if this is for a time period, starting from a time period, because when she presented AVA Trace, I thought about my mom. So she's had all of this shit scattered everywhere, and I'm always getting call, almost feeling guilty like couldn't help her to put everything together. So is AVA Trace able to go as far back as how many years, 20 years, 30 years that she's been putting all of this shit together, or is there a time period that it helps to do this? And is there a cost to tracing and putting everything together? Thank you.
Okay, so I'll start with the question about your trust. So the fact that you're here today means the journey has started. So I would like to have you, and thank you for the question. It brings it into perspective. Not before. So to start, it will be a conversation with us. So we can have that conversation today. We just understand what your overall goal is. So are you looking at asset preservation? Are you looking at capital appreciation? So what is your overall goal for that trust? Do you have beneficiaries you want to provide for, or are you just thinking to set up something right now that separates your assets from yourself, which is something I think we dwell in today, but that's also an option, ring fencing your assets. So we'll have a discussion to understand what you're thinking about. Is it just for legacy? Is it just for your beneficiaries, which is also fine? Once we've ascertained that, we'll take stock of the assets you actually want to put in a trust. So that's cash, properties, stocks, whatever the case may be. If you have the documentation, we'll then look at how to transfer the asset into the trust. But the first step will be to have the conversation. We'll take your instructions, take stock of the assets was transferred to the trust, and then we'll execute from there. So that's pretty much it. So we can have, I look forward to having a conversation with the attack session today. Oh, great. So that's the first test. Perfect. Perfect. Thank you, sir. So for the inverse shared cases of power back at this section, you want that you can buy in share. This is power back as a section, and then essentially charges to your total property. What we consolidate. Get a charge to you. Can have a conversation to you. I mean,
Do we have any other question in the rooms? Is there any question online? Okay, no question online. Any other question in the room? Speaking on conversations after this session, so Kunle, Moyo, and Adetoke will be available to answer your various questions if you need to have one-on-one session with them. Is there any other question in the room? Online participant, you can ask your questions now. All right, sir.
For people who die, that's doubts.
Maybe subsequently administrators are appointed. Can they transfer the assets to a trustee?
Moyo. Yes, sir. The simple answer is yes. They can. But if we go into the details of the assets, the documentation available, and we would understand the nuance better. But simple answer is yes. The lawyers in the way I also know the yes, it can.
Okay, so maybe just a quick one on the transfer of assets into the trust. I know you mentioned things about that transfer. Does that transfer include you having maybe some properties already in your name? And is that a real transfer where you transfer from your name to the trust? I just want to, or does it remain in your name and then it's being managed by the trust?
Okay. That's cool, man. Well, let's see there. Thanks. All right, sir. So yes, it entails a real transfer. Because we understand in the Nigerian context is complicated and it can be prolonged because of the way the land registries work. But yes, we do require it to be transferred from your name to the name of the entity that will hold the assets. And you can structure that with you. You can do a step one that will lead you to then the alternate transfer based on the timeline that you are able to work with. And that is for real estate. For stocks is also the same thing. It will be transferred to a trust account. Say the stocks are being held in your personal name, we'll set up a CSCS account in the name of the trust, and then the stocks will be transferred. Same with investments. If it's being held in your personal name, would have a conversation with the house that holds that asset and see how we can transfer. So we can start with transferring proceeds if that's possible. When there's liquidation, and there's a liquidation event, if the instrument matures, whatever case, he then transfers the capital to the trust account and invest in anymore.
I just have a comment on that because if it's an asset that it's a property, you might worry about the costs of the transfer between different owners. For example, in Lagos State, and I believe in Abuja, if you want to do that transfer, there are some charges depending on the price, the valuation as the point. So I think the simple way you might want to approach that is let the economic benefit of such assets start accruing to the trust effective immediately to grow it. And at the point of exit of that asset, you ask that the payments, right, be transferred to the trust so that when you now want to replace the asset, you just replace it in the name of the trust itself. Because if you are over it in perpetuity in that name and look at the cost of the transfer, you can just note that the trust has an ownership on it while the economic benefit continuing to goes to the trust. I think because one of the principal reasons for that decision being slowed down is the cost of the transfer of the asset. For every other asset class, cars, stock, money, cash itself, an aeroplane, a yacht, all those ones are easier. The transfer cost. So the cost is usually a consideration in the movement. Yeah.
Okay, hi, good morning. I work in the entertainment industry, and if there's anything we all can relate with is most of the time seeing our colleagues coming online to beg for maybe sometimes mostly for health. Now, is there any plan for maybe health insurance investments that we can have, mostly when it comes to entertainers, because it's a lot where you see a lot of them coming online to say, oh,
we need donations for a particular operation and software. I don't know if there's anything, there's a package for that to be can have for a certain.
Okay. Yes. So you can set up a trust with the plan for it to take care of health circumstances and things like that, health bills and all of that. So the pathway to that will be to for the trust would invest in assets. So it will almost be like an endowment trust. Would invest those assets, and then over time the capital will continue to appreciate such that by the time the settlor, the client, or whoever that trust is being set up to benefit needs the funds, they are able to access them for those purposes. So it will be a purpose trust, to be like an endowment trust essentially, and then it will provide for their help at that time. But it requires foresight, either a lump sum, a large lump sum, or foresight. So years to build it, or a sizable capital that when invested can yield those kinds of proceeds. Hope that answers. Any questions? Or I think this is for AVA Mobile Asset Managers. Very good question. I see it.
Okay, yes. So let me just read out question for the benefit of people in the room. Adjusting for FX movement, that's appreciation or depreciation of the naira, Nigerian naira in USD. What is the average return on the investment managed by AVA? Okay, to differentiate between fixed income and equity market. Okay, I think there are two questions in there. First, I would talk about the returns on our dollar fund. I showed in my slide earlier that it's to about 9%, but as annualized year-to-date return. So portfolio last year, because the way the dollar fund operates, you have to maintain it, keep it. It's a bond fund. So when you invest in it, you are investing in it long term with long term focus in mind. So we pay dividends on the fund annually, once annually. So if you are coming in now, you get to benefit from the dividend that will pay at the end. If the year needs to end, they will pay the dividend in April next year when we have done our audit. This year we paid in excess of $6 per unit. So if you had about 10,000 units, you would be getting at least 6,000 in dividend. So analyzed year today by the nation is 9.89%.
That's 1,000 or 600.
600
or 10,000. 6%.
No, it's $6 per unit.
Okay, we have
Yeah,
8,000.
10,000.
You have 1,000 units, you have 6,000. All right, good.
Alright. So then they asked about differentiating between fixed income and equity market. Equity is stocks in of the company, shares of the company. So if you want to invest in AVA Capital but PLC just listed, by the way, yes, you can give us a round of applause. So if you want to own part of AVA Capital PLC, you could go on. We can talk to Adija Care, of course, or go on the floor of the exchange and we go buy you. So if you are buying into AVA Capital PLC, that's the form of equity investment. But fixed income is when the government or a corporate comes to the public to borrow money for a long term. So they want to borrow money for 5 years or 10 years or more. They issue a bond. Then when you invest in it, becomes a bond investment. So that's fixed income, technically. Thank you. If that answers your question, you may let me know. And if you want me to add to it, sure. Thank you, Mr. Mano.
Yes, sir. Please go ahead.
Sorry, from your name, AVA Global. Do you do investments in assets in foreign countries, securities, and interested in some global companies. Can I talk to you?
Okay, sir. So when you say investments, I want to believe that you have left the category open. So if you wanted to buy a bond, for example, you want to buy Angola bond, for example, we can help you acquire that. But if you want to buy stocks of, say, Tesla or Apple, we are not, you don't have the facilities to do that right now. The regulator does not allow us to do that, basically. But we can help you invest in fixed income. We can help you invest in bonds, euro bonds, issued by other countries. Thanks.
Thank you so much. Do you have any other question online or on site? Any other question for AVA Securities, AVA Global Asset Managers, or AVA Trustees? Okay. So let's make a comment in addition to acquiring or transferring the assets. It's a good time to start buying assets at the start of the trust, or when you have the trust already established, because that way you can then begin to build on acquiring assets in the name of the trust with the documentation of the trust. So it prevents you having to then start transferring. The costs incurred and the time it takes can be averted if you simply start that journey, or begin today. As you already said, maybe it may have been better to start 10 years ago, but now is the next best time, so that going forward every asset can then be purchased in the name of the trust. Thank you so much. Okay, yes, sir.
Okay, and just to quickly ask, which of your entities handles fundraising like capital raise? Because I know that you have trustees, which of them?
AVA Capital does that. AVA Capital PLC. So that's where the investment maximum license lies, and that's where I work.
I'm the managing director, so you can speak with me. Thank you.
Thank you, sir. Any other question or comments? Okay, there's one online. I'll do this. In the US and UK, there are many types of trusts. Is that same in Nigeria? Yes, there are different kinds of trusts. There are purpose trusts, revocable trusts, irrevocable trusts, discretionary trusts, senior-led trusts. Essentially, once we understand what you're trying to achieve, we're able to work with you to set up the various kinds of trusts. We align it to a form that already exists, or we create a bespoke purpose trust for you. So we're happy to engage further. So I think I know this person has spoken to you before, so we can engage further after the session as well to get more clarity on what you want to. Thank you so much for your question. Any other question or comments? Any general comments or question? Any clarification you might require? So please do well to fill your forms, your information forms in your folder, please, because we'll pick them up after this session. Also, we have provided lunch for you, a brief reception at the 2 halls behind this room, the J-Pop ID meeting room and Marian Adiremi meeting room. So we have lunch prepared for you. After this session, would like you to please join us for lunch. Also, if you are not a current customer of AVA Capital PLC, please, I'd like you to scan the QR code that will come up shortly on the screen to download our mobile app, so we can start your onboarding process immediately. Yes, please. So please take out your devices. If you are not already a customer, please scan the QR code to get our mobile app. That's the first step to joining AVA Capital PLC. What is it? Oh, coming right back, sir. All right, good. So you can scan the QR code and take it to a link to download the mobile app. You can also fill your forms as well, your information forms in your folder. Thank you so much. If you use an Android, you should Google Play Store, you find the app. Use an iPhone, it's the App Store, you'll find the app. Or you can just scan the QR code and it'll take you directly to a link. Thank you so much. Okay, we have officially come to the end of our session. And to close this session, I would also like to invite Managing Director, AVA Trustees Limited, Bolale Ekane, for the closing remarks.
Well, what an afternoon has been. Thank you all so much for taking out the time. It's been a very engaging session. I'm sure if there's nothing you've taken out of this session today, it's legacy. And simply put, we at AVA Capital PLCs will collect opportunities to capital. We have the capital for opportunities that is spot. We can connect those two. And the AVA Capital, we even go further and ensure that there is legacy. Our professionals are on standby to take your questions or areas where you require clarity. We're right here, and we have some breakout rooms where we would have those meetings for your own privacy. Thank you once again for coming, and we'll hope to engage with you further. Our numbers, we have our cards. At some point, we'll determine those cards across all. You can reach us at any time. Ask us any questions, but we expect that we would have physical meetings today. Like I said earlier, we have quite a number of breakout rooms where we can have such conversations. Thank you once again.
Thank you so much, Bola. Yes, and thank you once again for coming. Thank you all. We've had a great time this afternoon. Thank you and have a good day.